What is going on, guys? Today I have a very special video for you. We are doing a follow-up on the Palantir video that I did a couple days ago. It actually might have been over a week ago now, but basically that video kind of popped off. And in that video, I mentioned that I was selling puts below Palantir, and exactly what you want to happen when you're running the wheel strategy happened here. So we sold puts down below, and we'll basically get into where we sold, and basically we were exercised on them, and now we're in the wheel. We're actually running the wheel strategy. So we're gonna get into this video. We're gonna talk about Palantir stock, what it's done over the last couple of weeks, and why it's been such a perfect position basically for running the wheel in. And then we're gonna talk about why Palantir is popping off. And finally, we're going to get into the exact trade that I did on Palantir. And then we're going to go over basically what the next steps are. So am I going to sell calls? Basically, what am I planning on with the stock? So that's what we're going to talk about in this video. If you like the video, make sure you drop a like down below. And if you want to see more videos like this one, make sure you hit that sub button. So first off, we are going to take a quick look at Palantir and what the stock has been doing over the last kind of couple weeks. So today alone, the stock popped off. The stock was up over 8%. You can see here, 8.24% in a single day. And then in the last 5 days, right, the stock was trading down around $9. And what we did is we sold a put back a couple weeks ago. We sold a put at $9.50. And basically what happened is the stock ended up dropping below our strike price, and we were forced to exercise and buy shares. And we're going to get into all the numbers behind it at the end of this video. We're going to go over basically what I sold the put for and where we're at right now. But basically the stock has kind of just been on a roller coaster. It's been bouncing between kind of $9 and then up to $10 and then back down to $9, and we're back up to $10. So it's been very much on a roller coaster. But what sent the stock going up over 8% today? And that is basically Netflix stock. So Netflix reported earnings, and let's go ahead and jump into what they reported here today. Netflix has been going insane. So here we can see that Netflix just in the past day is up over 7%. They're up 7.35% in the last day. Over the last 5 days, we have absolutely insane numbers. They are up 23.29%, and this is absolutely ridiculous. Granted, the market has been rebounding a little bit over the last week, and with that, Netflix has been beaten down a lot more than the market, so it naturally is going to rebound a little bit better than the market and have some of these huge days where it moves a lot more. But yesterday after hours, they actually reported their earnings. So right in here, they kind of reported their earnings. You see the spike up, the spike down, and then overall, throughout the day today, they obviously had a monster run up. So what exactly did they report? So what they reported in terms of numbers we have here, they had an 8.6% surprise beat on their EPS. So they were expecting $2.95, but actually reported $3.20. So a very healthy beat there. And then revenue basically stayed in line. So these numbers, obviously there's a lot of positivity coming from the EPS side, but it doesn't necessarily grant the move that we've seen from Netflix stock. And let's go ahead and jump into why they actually moved so much. So I don't want this video to turn into basically a Netflix video. So we're going to get through these real quick. But Netflix, basically, they thought they were going to lose 2 million subscribers, and that changed. They only lost over the quarter 1 million subscribers. On top of that, they predicted that they're going to add 1 million subscribers in the third quarter. And then they're also going to crack down on some password sharing and then add an advertising tier. So basically, you can get Netflix for free. And then, as long as you're willing to watch advertisements. So that's kind of the couple things that actually caused investors to be very positive towards Netflix. And the reason this is important to Palantir is really it's important to the overall market. That's what it kind of boils down to. Netflix is one of the first big tech companies and kind of falling in the spec range, a little bit more of a speculative stock. They are one of the first companies to actually announce their earnings, and with that having this little bit of positivity in the market, even though it's just basically not as bad, as Netflix had thought, that's kind of a good thing in investors' eyes because they've priced in a lot of these bad things that, a lot of these companies announced last quarter were going to happen. So they were, predicting all these bad things, revenue being down, EPS being down, loss of subscribers, things like that. And basically the market's starting to figure out that, hey, so far it hasn't been that bad. So that's kind of how that relates to Palantir. So let's go ahead and actually jump into the trade and evaluate kind of what was going on with the trade and how much, return we're kind of seeing from this wheel strategy with Palantir. What we have here is basically a breakdown. We're going to focus on this first section here. So this is basically the trade that we have made so far. So we sold this put on 7/7, so July 7th, and we sold it at $9.50, $9.50 strike price, and we were able to collect $19.34. The reason it's 34 cents is basically I'm trading on TD Ameritrade, and with that you're going to pay commission fees. So I paid a little bit of commission fees, and basically it's $19.34. So let's take a look at the graph here. So we again sold that put on this Thursday, so this Thursday here of July 7th, and the stock was around $10.18, and basically we had it expire the 15th. So we could see that was almost directly at the bottom, which is, not a good way of doing things, but we're kind of going to see that it still works out, when you see a stock, especially when it rebounds like this, way up like this. So what we have in here is the appreciation and basically our total return. So right now we've appreciated. So from our $9, we bought all our 100 shares at $9.50. So we're in the trade for $950. And right now it's worth basically $1,002. So with that difference, we've made $52 there. And then our total return is the sum of those two. So $71.34. And what we can do is we can look at these two returns. So the returns are where it gets crazy because our total return, so basically the $71.34 divided by $950, we're sitting at a 7.51% return in less than a month, which is absolutely insane. If you could repeat this, obviously over a year, you'd be well over 100% return, or actually kind of just around 100%. But what's interesting to look at, and the reason a lot of people like running the wheel, is this is the return with only appreciation. So if I said, hey, I want to buy Palantir at $9.50, I'm not going to sell a put though, I'm just going to buy it at $9.50, then I would have only, and I say only because this would still be a great return, if you can duplicate it over the year, but you would have only made 5.47%. So again, that's one of those things. Basically, again, this number, just to go back, is $52 divided by 950. So that's where we're getting that number from. And then we're adding in the actual credit here to get this number. So overall, that's one of the benefits of running the wheel is, right, you get that little extra bit of return that makes a lot of difference, over the long run. So what I wanted to go into next is, right, what is the plan next? After you sell the put and you get exercised, what do you do to keep capitalizing on, your 100 shares? And that is, right, to sell calls. So what we're looking at here is basically the expiration date of 7/29, so July 29th. And I kind of have two options in here. And I went into the options chain and looked at basically, what's going on, what's the price for that. So if we went out here and we sold the $10.50 call and we sold it to expire on July 29th, we would collect around $24 right now. Again, this is without including commission fees. And then we would have $100 in appreciation. So we would have $124 in total return. And what that would come out to in terms of percentage wise would be a 13.05% return, which again would be absolutely insane for less than a month of trading. So this would be great. The appreciation would be obviously if the stock traded over $10.50 at expiration. So basically forcing you to sell your 100 shares at $100 in appreciation, and then also including the $24 that you collected. The second option that we have here is if you sold a call at $11. And this is one of those things where you kind of have to weigh the pros and cons, right? Because there's pros and cons to each of these examples. And we'll get into that here in a second. Let's just jump through this one real quick. So if you sold the call at $11, you would only collect $12. But you would make, again, assuming the stock trades above 11 at expiration, you'd make $150 in appreciation. So that would make a $162 total return. And in terms of percentages, you would be at 17.05%. So obviously, when you just look at these numbers, the 17.05% looks better. But what you have to remember to consider is, right, the difference in premium that you're collecting here. So what you're collecting here is, right, if the stock trades down or sideways or anything like that, you're going to collect and keep this full $24. Where in this option, if the stock trades down, sideways, or even a little bit up, you are only going to collect your $12. So you have to kind of make the discernment of, do you think the stock is going to go up a lot? So if you think the stock is going to go up a lot over the next week as earnings come out and things like that, then it's probably a better idea to keep selling further out of the money so you can capitalize on this appreciation. But if you want to hold on to your shares and you think the stock is probably going to trade down or sideways or maybe just a little bit up, then it makes more sense to sell close to the money like this 1050 call and collect that full $24 and basically not get exercised. So that's kind of the trade-off that you have to make and have to understand when you're looking at some of these call options. And even on the put side, you have to have the same trail of thought. So again, it's all about kind of your personal preference. If you're fine with collecting a lot of premium and a little bit of appreciation, then sell close to the money. If you are more focused on appreciation and want to capitalize a little bit more, let your stocks run out, then sell a few strikes away and start collecting a little bit more money in appreciation. Personally, my plan is actually to sit on my shares and see what happens over the next week or two. So if the stock, there's a lot of positivity in the market, and I think if the stock runs up a little bit higher, then I'll probably sell a call. But I'm just getting the feeling that a lot of the bad news that was kind of priced in earlier in the market, it seems like it's starting to melt away a little bit. So I want to see if that's the case, see if the stock runs up. Palantir is one of the stocks that it could easily go up another 20% in the next 2 weeks. So I don't want to lose out on that potential gain by just getting $24 or $12. So I'm going to kind of sit on my shares and see what happens over the next week, 2 weeks, and then at that point potentially start selling some calls if the stock is still around this $10 price. So that's basically all I've got for this video here today, but I did want to ask one thing from you guys. I have been thinking about starting up this series where I open up a Robinhood account, put a little bit of money in it. I'm thinking 2 to maybe 3K, and basically just trade options for fun. See what we can do, trade a bunch of different varieties, whether it's buying calls, selling, spreads, whatever it may be, kind of going through my mentality and actually learning a lot along the way, kind of through my own trading and kind of setting up processes, things like that. So if that's something that you would be interested in seeing, drop a comment down below. I don't get a ton of comments, but I want to see how many people stick around to the end and how many people would be really interested in a series like that. So if that's something that interests you, drop a comment down below. I'm going to read all of them, but I really appreciate all the support recently from you guys. And as always, if you like the video, make sure you drop a like down below. And if you want to see more videos like this one, make sure you hit that sub button. And as always, have a wonderful rest of your day.